This is Eric Muathe, Muathe.com. It is April 8th, 2020. Let's take a look at the charts for UNG and for GDX, purely from an educational standpoint. So there's the date. Take a look at the charts here for GDX, and we're going to take a look at the chart for natural gas UNG based on the daily charts using simple RSI lines. So right now we are seeing natural gas down for the day about 4%. And let me offer up a couple of lines. So the first line could be that it is responding to the RSI topside, as we can see here. That's one view based on a simple single line analysis. Let's take a look at another potential line of consideration, which is this backtest line. By the way, this line gives us the breakpoint right here. Actually, it's right there. And since then, this line has been short-term resistance as far as natural gas is concerned. So those two lines, in my opinion, are the reason why we are seeing this current pullback. Of course, if the ETF is gonna move higher in the coming weeks and days, it needs to clear those two lines. Otherwise, at this rate, looks like it is preparing itself for a swing trade to the downside. Now again, the only thing we are considering here is simple RSI lines. Let's take a look at GDX. Right now, GDX up about 0.48. So line number one, we can start with the backtest line. As such, I can do it like that, and we can see that this line gives us the breakpoint right here, which is this down day, uniform activity above the line and back below it here. Let's call that a reversal for this reversal area here, and a major move down. And since then, we can see that this has become a little bit of a trouble spot. So that's a line that it needs to stay above if it's gonna move high. Now there's another line, in my opinion, which makes sense if we draw it this way. Now that's one way of drawing it, but we can also draw the line from here and end up with the same conclusion pretty much. Both lines give us a breakpoint here, and we have uniform activity above the lines and back below it for this area, which suggests that this was a well-designed trap zone, and a very effective one at that. And then we can see that we are now back to test that level. So again, like we saw with natural gas, we need to move above these two lines if there's going to be a sustained move higher by GDX. Otherwise, here is where we can start seeing resistance and the next major swing trade being to the downside, again purely from an educational standpoint. By observing how those two instruments are going to behave in the coming days and weeks, we can learn a lot about how to draw RSI simple yet powerful lines. Eric Muathe, Muathe.com. As always, good luck, peace and blessings. ETFs.